Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi here with my co-host Lawrence Lewitton, content director at The Tie. Before we get into it, let's take a look at what's going on in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at $30,714, up about just over 1% in the last 24 hours, holding above that $30,000 mark. We'll talk about what's driving that in just a little bit, but let's see what's happening with Ether. The CoinDesk Ether price ETX index is at 1,884, taking a little bit of a nosedive around 12 p.m. yesterday, but gaining back some of that traction for virtually no change over the last 24 hours. And DeFi assets, let's see how they're doing. The DFX CoinDesk's DeFi index is at 109, down about 1%. Good morning, Lawrence.
Good morning. Or I have to say bonjour here because
I was going to say.
You go to jail if you say good morning now.
Comment ça va?
Ça va bien.
I think
we fulfilled our bilingual
there
requirements.
There we go. For so anyone who's wondering what's going on.
Yeah, the doesn't have to arrest us now.
There you go. All right. Well, greetings to our audience from Canada. From both of us, let's talk about what's going on in the headlines this morning. Lawrence, during an interview with Bloomberg Circle CEO Jeremy Allaire, said that he expects a new wave of Bitcoin ETFs to be approved as past concerns of regulators are being addressed. He's sounding very, very optimistic about these ETF filings we saw in the last week or so. What are your thoughts?
He should be as certain about that as I'm certain I'm standing in the United States. There is no way to predict exactly what the SEC will do. I think that's a very bold statement of Alaire to say. I mean, if he knew stuff, maybe Circle and his partners, Coinbase, wouldn't be in so much difficulty, or at least hectic situations here with the SEC. So I wouldn't try to predict anything with the SEC. He could say it has a better chance, and that's certainly the case. I mean, they've added things to it, to the ETF filing that others did not, but. And also, BlackRock through iShares has a considerably larger legal team than some of the other players that have filed, and a better track record with filing things. They have an incredible track record with filing ETFs, but I wouldn't say it's a slam dunk. I think that's. This is an SEC which is going after centralized exchanges. It's an SEC which it feels uncomfortable with it. Bitcoin, granted, they might view as a commodity, and we'll find out. But I wouldn't make that bold of an assumption that it definitely will happen. I would say it's a higher chance than previous attempts.
Yeah, Lawrence, I'm with you there. And you mentioned it. Of course, Circle and Coinbase are business partners. And so, in some way, Jeremy Allaire has to be optimistic for his partners, as Coinbase is listed as the custodian in the BlackRock ETF. Yeah,
you know who else is optimistic about it? It's none other than our next guest. We're seeing Bitcoin right now trading at about 30,000. It went up to that price, in part because of the ETF excitement. But we also have now an expiry. It's the end of the quarter. It's the end of the month. It's options time on Friday, and 30,000 is the magical number where you see lots of puts and calls. So there's a lot of interest there, and somebody who looks at this and is seeing the ETF filing as something that's a positive long-term for Bitcoin is none other than OANDA Senior Market Analyst for the Americas, Ed Moya. Welcome back, Ed.
Thank you for having me.
Glad to see you once more. So we have all this, we have all this excitement going on with the ETF filing. You are really, I would say, you're very bullish on Bitcoin.
I think I'm very constructive. I think when you take a look, this recent rally has really surprised many. But yet there's, you have to have some caution. The liquidity has been rather low. Some data firms suggesting, we're 20% lower than what we saw earlier in the year. But this this interest by BlackRock, when you take a look at the Grayscale lawsuit and the 3-panel judges' comments, it seems that by the end of the summer, we could have some really good news about a Bitcoin ETF. Now, will it get shut down? If so, then we might have the final path that is needed to get that ETF done. I think with BlackRock's, when they file for an ETF, they get it done. They've only missed one ETF, and that was about a decade ago. And then eventually that product was done. So I think there's high confidence, or it's growing, that we will be seeing a Bitcoin ETF. And that has always been one of the key catalysts that people were expecting to trigger the next wave of growth and interest into this space. So right now the interest it's low, and the people that are buying, it's really large accounts. It's the whales. This is not the little retail guy that's throwing in 10 or 20,000 into a Bitcoin position. This is, you're seeing a significant of, larger orders that are, taking advantage of this low liquidity. So we'll see what happens. But I think there's a lot of optimism here that this could be Bitcoin's potential breakout moment.
How big of a market do you expect this to be? Given, we're looking at a potential recession coming about towards the end of the year. I mean, the probability, I would say it's more likely we'll have a recession than a Bitcoin ETF by December 31st. I'm not saying either one of them is impossible or either one is a guarantee, but if I look at the probabilities, it's pretty high that we'll get a recession, given the way the yield curve is currently inverted, given the confidence and the numbers that we're seeing coming out, and a Fed that seems intent on raising rates to bring about a recession versus just raising rates to sop up the money supply. So is this, what kind of a tide do we expect in Bitcoin to hit? I think you had a number of 40,000 for Bitcoin. What kind of a tide do you expect going into Bitcoin that would raise its price to that level?
Well, I think the macro environment is one that's being heavily debated. I've been in the recession camp for more than a couple of months, and I anticipate that you can't have the greatest amount of fiscal stimulus and monetary support get taken away, and then not expect some hard times once you're really struggling to fight inflation. But there's been a lot of resilience in the economy. Yes, the data is starting to crumble, but I anticipate that this recession is going to be pushed into the first half of next year, and given where the way Wall Street's going to position itself, you're going to see a de-risking moment. Right now, stocks have overperformed. I mean, this has been, I think, for Bitcoin, you probably would have seen 35,000 already if it wasn't for the AI movement. I think that's really taken away some of that institutional interest. But I think overall, you're going to see that people are going to look to invest in beaten down sectors, and they're still skeptical to go into the small cap stocks. So I think when you take a look at how the various asset classes are positioned, crypto is starting to become very attractive here. I think in an inflationary environment, Bitcoin performed terribly during the Fed's tightening cycle. I think as we start to see the end, and I'm in the camp where you're probably going to see just one, maybe two more rate hikes. And I've been fairly, consistent with that view. I've only upgraded my forecast, I think, 3 times this year, which probably really means 4, because there was a couple times they were on the fence. But I think overall, this is a market that it's going to look for, which asset class can, withstand, a recession. And I think right now, given you're seeing it's big money that's going into Bitcoin, I think there's a solid floor here. The biggest concern I have is the dormant money that was institutional, that got in between the 30 and 40,000 range. Are they going to use this rally as the time where they just cash out and head for the sidelines? That's the one thing that's the big concern for me over the next 6 months. But I think overall, there's still a good reason to be constructive here about Bitcoin, and I would not be surprised, given where the peak, when we finally get that peak in the dollar, and as you start to see those weaker consumer spending numbers, and you start to see the unemployment rate tick higher. I think you're going to see Bitcoin is going to, I don't want to call it a safe haven asset, but it will have days where it does perform like one.
And does your outlook remain the same if the ETF does not get approved?
My outlook will change. It will. I think the ETF. I think what we need to see is there to be confidence that there is a path towards a Bitcoin ETF. So. If BlackRock gets a no, but if there is still strong optimism that now there's a better understanding on what needs to do to get one passed through, then I'm still constructive. The 40,000 call might get pushed into next year, but I think overall it's not just BlackRock. I think you have other key players. That makes me a little bit more optimistic. So would I say it's 50-50? I'd say maybe it's a little bit better than 50-50. But I'm not saying that this is like a 90% deal where this should be done.
So I have to ask, because of course we kind of do have we have a Bitcoin futures ETF. We have a leverage one that's coming out. We have Canadians have put out Bitcoin ETFs. That it's already happened in many ways. It's already past tense, and we're not seeing, trillions of dollars and hundreds of billions of dollars being piled into these things. They're healthy for small ETFs, but it's not been gangbusters. What makes this particular filing? What would make a spot ETF a huge deal for Bitcoin, given what we've seen previously with other Bitcoin-related ETFs?
Well, I think the narrative has changed. I think right now we're no longer fearing regulation killing crypto entirely. I think you're starting to see that the retail world has been fairly dormant, but I think this move, if the BlackRock ETF does get done, it will trigger a lot of high level I think in traders that are looking for what's going to be the next big burst. I think right now the AI trade has seen some exhaustion, and I think you're going to see that the timing of this potential ETF, if it is by end of summer, which some legal experts are anticipating some of these rulings, you could see that could be the catalyst. Taking a look at the environment across, I think, equities and some other commodities, I think crypto is now becoming, it's in the discussion again. So I think it's a good timing for the ETF, and this could spur a next big move higher.
Let's move away from Bitcoin and the ETF and talk about the rest of the crypto markets. This morning, Robinhood is delisting Cardano, Solana, and Polygon, as those were some of the tokens mentioned by the SEC in the lawsuits against Binance and Coinbase. What's your outlook on the broader crypto market as more and more tokens are being noted as securities by the SEC?
I think you're going to see a lot of traders will liquidate those positions, and they might just put it back into Bitcoin. So that's also going to be another positive for Bitcoin. But unfortunately, it's not really going to do well for the growth of the cryptoverse. I think you're going to see that the label of being an unregistered security is crippling, and that will most likely be fought, but that's going to get hard. It's going to be hard to get past that, and I think investors are going to be a little bit hesitant as far as betting on those.
All right, Ed. So you're bullish on Bitcoin all around.
Yes.
Ed, thank you very much for joining us this morning. That was OANDA Senior Market Analyst for the Americas, Edward Moya. We're going to take a short break. When we come back, a lawyer weighs in on a new report from the FTX team that digs through the financial guts of the failed exchange. Stick around. Good morning and welcome back to First Mover on CoinDesk TV. A new report from the FTX bankruptcy team says the company owed its customers $8.7 billion after commingling and misusing their deposits. Joining us now to discuss is Wilk Auslander LLP partner Eric Snyder. Welcome to the show, Eric.
Thank you for having me.
Thanks for being here this morning. Now, your specialty is in bankruptcies. The new FTX CEO, John J. Ray III, has said this is one of the worst cases he's ever dealt with. You've read the report. Talk to us about the takeaways and where this case kind of stands in the realm of bankruptcies.
So in light of, and this has probably been good for FTX, listening to the previous speaker, Bitcoin and Bitcoin-related products have held their value and increased. So when the bankruptcy came about late last year, there was concern that many of those coins were illiquid. But it seems like the trustee, John Ray, has recovered over $7 billion. So if the number of creditors is approximately 8 billion and change, it looks like that most creditors will receive pretty close to all of what they are owed, which to me is the most important thing, that the value of the cryptocurrency has stabilized and they were able to liquidate it.
How is it? Is it prioritized? How would this work out? I mean, who gets priority in all this? Obviously, when you have a situation like this, robbing Peter to pay Paul, it's from what I gather is another situation like what we're looking at here. Is this, who gets priority, or is it just working out, liquidating the assets and allocating it based on, everyone it's not first come, first serve, but just divvying it up that way?
Right. So bankruptcy is about making sure that nobody cuts in front of anybody else. If there's a secured creditor, someone like, you have a mortgage on your house, they get paid first. But for the most part, the customers are all going to be treated equally. They'll put in claims, and they're treated pro rata. Nobody gets paid more than anybody else. So if there are no secured creditors, and I don't believe there were in this case, then everyone should be treated about the same.
Some recent information came out about how much money has been spent by the new FTX team in sorting out this bankruptcy. I believe the number was $200 million to date. Is that a surprising number for you to hear in a case like this? And how much money do you expect them to spend over the term of this bankruptcy?
Well, it's a surprising number because it's a big number, but in Lehman Brothers and Mr. Ray was involved in Enron, the numbers were a lot higher. As the case goes on and as there's litigations, these are law firms that charge a lot of money. And I think in this case, they've provided their value. I mean, if we now have $7-8 billion, where when we first filed, we had a lot less, then they bring on professionals that know what they're doing and they add value. And the answer to your second question is it'll probably be a couple of $100 million more, but if it gets everyone paid in full, then the money is well worth it.
How liable will some of the employees be? I mean, obviously, Sam Bankman-Fried is the center of the storm, but there are a lot of people who aided and abetted the crime. And Sam, if you're watching, which I think he sometimes watches this show, feel free to call in and say what you need to. But nonetheless, there were other people involved in the situation. How liable are they financially, and how liable is Sam Bankman-Fried financially?
Well, the trustee or Ray can bring lots of claims, and it's entirely possible. I'm not a criminal lawyer, but as a civil lawyer, obviously there's concern about the commingling and breaching of duties of officers and directors. Again, hopefully if everybody's paid in full, this is not going to be an issue, but obviously the report has some damning allegations against Mr. Bankman-Fried and certain other employees. So that's going to be wait and see. The immediate goal of the trustee is to liquidate the collateral. After that, then they'll see about litigations and whether there's other opportunities to collect money.
Just a few moments ago, you said that money, the hundreds of millions, will be well spent if it gets everyone paid back. There is a little bit of a hole here. So I think they said around $7 billion in liquid assets, but about $8 billion in customer funds were not used correctly. That's like $1 billion that they don't have. Who could be at the bottom of the barrel if there are creditors who don't end up getting any of their money back?
Well, so if the creditors aren't paid in full, then equity gets wiped out. So that would be the biggest concern. If that you were a shareholder of FTX, then your shares are liquidated. Your shares are worthless and deemed worthless. So the biggest concern is getting everyone paid in full. But even before they start real lawsuits, for them to be very close is a very good sign that the value of the hard assets, the cash, the real estate, and the liquidated cryptocurrency is bringing them that close is a good start. And
does country matter? I mean, we have it seems like they had some real estate in the Bahamas. So what exactly does that confuse? Oh boy. Does that confuse? That's all right. As a prudent moment, did any does it complicate things that some of the assets are physical assets in the Bahamas, such as real estate?
No, that's easy. Bankruptcy is worldwide jurisdiction, and they can bring lawsuits anytime to bring it back in. It's property of FTX, and they can hold it and keep it if it's in their name. If it's in somebody else's name and they didn't pay value, then they can sue to get it back.
And lastly, maybe this is a little bit of a novice question, and you started to unpack this a little bit, but unpack it a little more for us. How much can the findings in this case and this report play into SBF's criminal trial? How much do you expect to see from this kind of overlap?
Well, obviously, the trustee has gone into a great deal of detail, but it's just there's no way of knowing how this affects the parallel federal investigation. Obviously, they're working in tandem together. The feds are letting this go forward. They are letting the feds do their thing. But it's just too early to tell. But obviously, a lot of the findings are, let's just say, might be difficult for the former officers, directors, and shareholders.
Eric, thank you very much for joining the show this morning.
All right. Well, thanks for having me.
That was Wilk Auslander LLP partner Eric Snyder. Coming up, CoinDesk explores crypto hubs all over the world this week. After the break, we're going to take a deep dive into Abu Dhabi. Stick around. Welcome back to First Mover. This week, CoinDesk is taking a closer look at the top crypto hubs in 2023, outlining the best places to live freely and work smart in the Web3 and blockchain space. Today, we're taking a closer look at Abu Dhabi. Joining now to discuss is the co-founder and CEO of virtual asset trading platform MidChains, Basil Al Askari. Welcome.
Thank you for having me.
Thanks for taking the time to join us, Basil. Now, when we talk about crypto hubs, we so often hear about Dubai when we're talking about the Middle East, and we don't often hear about what's going on in Abu Dhabi. So make the differentiation for us between Dubai and Abu Dhabi when it comes to the ongoings with Web3 and crypto.
So both Abu Dhabi and Dubai are part of the United Arab Emirates. The UAE is the country where Abu Dhabi is the capital, and Dubai is a major city in the country. So personally, I'm a national of the UAE. I'm from here, born and raised, and I happen to be sort of living in Abu Dhabi and from Abu Dhabi at the moment, which is where we've put up our business. So if I kind of take the clock back to when my co-founder and I shifted over from TradFi into the crypto world, we really wanted to do things in a way that would meet compliance requirements for large institutions. As you probably are aware, there's a lot of very, very large sovereign wealth funds that are in our part of the world, and that's where him and I came from originally. And our view was we couldn't do this without being fully regulated. And at the time, the first comprehensive virtual asset regulatory guidance in the UAE was released in Abu Dhabi, and this was in the summer of 2018.
One question I would have, to Jen's point is that, when I think of Dubai, I don't want to say the rival city in the UAE, but obviously also a significant center. I think of gold. I think of transactions. Abu Dhabi is a little bit different. Has a different raison d'être. It's a totally different mindset, etc. So within the UAE. The distinction between how the two view cryptocurrencies, the two major cities in the country, the two financial centers, if you will, how do they view cryptocurrencies, and why would you say, let's say, Abu Dhabi is a better place for crypto than Dubai, if you would say that?
So I wouldn't say one is better than the other. I would say both views are quite similar, right? Guidance comes from leadership for the whole country, and sort of the free zones that are practicing the regulation and putting it forward for companies like ours, as well as international companies, to come and set up, can pick and choose where they feel more comfortable in a way. For example, we have presence in both cities and licenses in both cities, so we're not partial to one or the other. The Emirates is the Emirates. At the end of the day, we're here in the country as a national corporation that caters to international as well as local customers, institutional and otherwise. So from our perspective, the reason why our headquarters is in Abu Dhabi is fairly straightforward. It's just because the regulation came out several years before Dubai at a state level. And that's the only reason, really, from our perspective at the time, as well as the presence of our investors. So on our cap table, for example, we have Mubadala, which is one of the largest sovereign wealth funds in the UAE, as well as ADQ, who is also another very large sovereign wealth fund, both of whom are located in Abu Dhabi.
Mm-hmm. But in terms of usage of cryptocurrencies, is there a difference? Is one more retail versus the other more institutional, or in terms of interest, or do you find them both to be fairly institutional or fairly retail?
I think that's a good point to make, and I would make the distinction not just for crypto, but just generally as the markets go. Dubai has always had more of a retail focused market. There's much more tourism that happens and a lot more retail level transactions. It's always, if one is setting up a retail business in the UAE, regardless of sector, Dubai is definitely a hotspot for it to be. Whereas, to your point, Abu Dhabi is definitely much more institutional. We have sovereign wealth funds, very large family offices, as well as there's been a lot of news around Western asset managers moving and setting up regional headquarters there as well.
It's a gorgeous city from what everyone has told me.
When we talk about crypto hubs, we should talk about challenges, right? Most of them ladder back up to regulation. Many crypto hubs have hit barriers when it comes to policy, regulation, maybe banking partners. What challenges still exist for crypto companies that are operating in Abu Dhabi?
So I think that it's UAE-wide. It's not just necessarily specific to Abu Dhabi. I think often crypto firms don't realize how much it really takes to become regulated. For example, in our case, we spent about 3 years getting all of our licenses in place before we even were allowed to execute our first trade in a fully compliant way. And it was a mission from our perspective to say, okay, we're going to do this with all permissions and manage our regulatory tail risk as an institution if we were ever to become a global player. And from that perspective, it's not a small task to acquire a license and to apply for it and go through the vetting and assessment process, including setting up infrastructure where perhaps at the time, especially when we started, there wasn't that much by way of catering to our industry. As it relates to kind of going into the future here, one of the challenges that still remains outside of clear regulation is broad, unanimous support from the banking sector. And I'd say that support exists. We're a very well-banked institution, but it's very difficult for many crypto firms to get that support at the banking level. There's a lot of relationship work that has to go into it to build trust as an institution, especially in light of recent events in our industry over the last year. But that still remains to be seen. From a regulatory perspective, just to summarize, there is no reason, for example, for banking to be a challenge. But from banking risk appetite perspective in the industry in the region here, there's still limited risk appetite for banking crypto businesses.
How did you gain that trust with your banking partners?
I think, look, it's a question of time. It's a question of who sits on our cap table, and it's a question of even personal relationships that were built up over the years. So we're not a new group, at least between myself and my co-founder. We're from here. We're well networked. It's not a huge place. The financial services community is quite small, and often you're 1 or 2 degrees separated from other professionals in the space here.
And lastly, MidChains is the first licensed crypto firm in Abu Dhabi. Maybe do a little compare and contrast for us. For the show before you joined, we talked a lot about regulation here in the U.S. Tell us about the process getting licensed in Abu Dhabi.
I was listening in on the show, and I think everyone in the industry follows what's happening in the U.S. quite closely, because it's going to ultimately sort of push different outcomes in the space, which does have an impact globally. So from our perspective in the UAE, what we observed is that regulation was very forthcoming and very clear early on. The distinction between, for example, what is a security, what is a commodity, and what is a virtual asset was made clear as far back as 2018. So for us, that's never really a question in terms of what asset sits in what category, nor does it particularly matter. What matters most is really the process by which we're governed. For example, how we perform our KYC, how we perform our AML checks, how we monitor for market abuse activity on the exchange, and the controls that we have for governing assets held under custody. For example, the policies and procedures that govern the staff that manage these services, the reports that we have to generate to the regulators. And I'll give one very, very clear example. From my perspective, proof of reserves, which was a hot topic a little while ago, was never quite sufficient to prove that an exchange or a custodian has sufficient assets to meet the liabilities it might have on its balance sheet as well. But for example, doing daily reconciliations and providing those to our regulator ensures that our customers have that level of comfort by way that we are custodying their assets and not misappropriating them.
Basil, thank you very much for joining the show this morning.
Thank you very much for having me again, and to everyone celebrating Eid tomorrow, Eid Mubarak.
Thank you.
That was MidChains co-founder and CEO Basil Al Askari. Don't miss our Twitter Spaces happening Wednesday at 11 a.m. Eastern Time on the top crypto hubs of 2023. And if you can't wait until then, you can check out the other crypto hubs on CoinDesk.com.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
A federal judge has rejected Binance's request to curtail the SEC's use of language pertaining to Binance US's management of customer funds and press releases. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk Absolutely Positively, the only thing you should ever read, only newsletter that really matters, State of Crypto. Good morning, Nick. Happy Tuesday.
Good morning.
So, what is it? They don't want people saying things that they don't want their feelings hurt. Do they need to go to a safe space? Is that what Binance needs? Their feelings get hurt when someone says the wrong thing. In this case, the SEC. What is this judge doing?
Yeah, so this stems back to last week when Binance's attorneys filed a letter of complaint basically to the judge overseeing their case, saying that the SEC's use of public statements to claim victory with the joint agreement and proposed stipulation could bias the jury, could insinuate that Binance US had in fact lost access to customer funds, or that customer funds had moved overseas, when in their words, the SEC had proven no such thing. The judge obviously declined to take any action on the complaint. Basically saying right now it's a bit early. We'll see how it goes.
Can you tell us any more about the judge's response, what they said, some of the reasoning that was given?
Yeah, I mean, really, it's just a case of it being, a bit early, too early in the case to delve into this. And obviously, she didn't think it was a serious concern at this point in the case that, there might be any jury bias or issues of that nature. The more interesting thing, I think, is probably her setting out a rough timeline at this point for Binance to respond, for the SEC to respond to Binance's response, and to basically see how the case will develop. So, right now, I think the most interesting and important parts are we're looking at a September deadline for Binance and Binance US to respond to the SEC complaint and lay out, in detail why they believe the SEC is mistaken in suing them. And we'll have the SEC's response to that in November.
Does it matter? Does it matter to the case?
Yeah, so these responses are going to be the actual.
But I'm saying this particular skirmish.
Probably not. To be honest, it's one of those things where the SEC said, "Hey, we won in court," and Binance's response has been, "Wait a second, this was a thing we all agreed to." Right now they're all going to kind of do their own thing, but as the case develops, I think that's where things will get a bit more interesting.
Looking forward to it.
Yeah, Nick, I mean, what do you expect to happen next?
So in this case, because we now do have a firm deadline of September, which is obviously a couple months away, I don't expect too much to happen. If we look back at when the SEC sued Ripple, once they got past the immediate, stuff, which were now appear to be past, there was a bit of a pause until we started seeing the, requests for subpoenas and requests for people to show up and the actual motion to dismiss, motion to continue. So, I'm not going to say it's going to be on pause, but I do think that the next few months at least will be a little less, let's say, interesting than the first couple of weeks of this month have been.
All right, Nick, thank you for joining us this morning. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And that's it for First Mover. I'm Jen Sanasi. Thank you to my co-host, Lawrence Lewitton. Lawrence, we got 2 French phrases in the show today. Tomorrow, maybe we'll get 3 in.
Tabernacle. That's not 3. It's not really French. It's Quebecois.
Yeah, there you go. First Mover returns tomorrow at 9 a.m. Eastern Time. The hash will be on your screens today at noon. You're watching CoinDesk TV.